Today I want to talk about something different. I talk a lot about stocks, investing in companies, I'm watching valuations, and where I think certain opportunities might be. But sometimes the smartest thing to do with your money is to not invest it. And that's what I want to talk about today. I'm not saying that the stock market is bad. I'm not saying you shouldn't invest at all. I'm definitely not saying you should sit in cash forever. But I think there's a side of investing that doesn't get talked about enough. And sometimes the next dollar doesn't need to be in a stock. It might need to go somewhere else first. Maybe it's just paying off debt. I have debt, you have debt, we all have debts, and maybe that's the best thing to do is just tackle that debt. Maybe it's building up your savings. Maybe you don't have a lot of savings. You want to build that up instead before you invest. Maybe it's having enough cash available that's for the unexpected, and you want to save that emergency fund first before you even invest. It doesn't mean you're completely throwing off investing, but at the same time you don't want to throw off your finances if you don't have cash available for like emergencies. And honestly, I think the most important part of investing is having that cash available, and it's important. So today is going to be a little more casual, no stock picks, not trying to predict where the market is going next. Don't have a crystal ball there, or I'm in Back to the Future and I'm looking out the almanac there. But just a conversation. That's all I want to talk about. Where your money might be going and where it makes sense to be putting your money. So I think there's this little idea: if you have some money sitting in your bank account, somehow it has to be doing something. You hear little things like your money needs to be working for you. Don't let cash sit around. Invest as early as possible. And those are all great, and there's obviously some truth to that. But over long periods of time, investing can be one of the best ways to build wealth. But financially, your life isn't just about those investments accounts and how much money you have in the bank. You got to have a life too. You got to enjoy things, and this at the same time, you have bills that come with living that life. You have unexpected expenses, you might have debt, you might have a mortgage or rent, a car note that's in a car. Maybe a car suddenly needs repair. Your house needs repairs. House, condo, anything like that needs a repair. Your income could change, things like that. And when those things happen, cash available can incredibly be valuable. It can be valuable then. Because the worst time to be forced to sell an investment is when you need that money. You need that cash. It's happened to me before. You could lose your savings, something could happen there, life event, job loss, anything like that. Something unexpected. Imagine you have 20,000 invested, the market drops 25%. Now it's down to 15,000, and then something else happens, and suddenly you need that 15,000, and it's stuck in some stocks that you're hoping that are gonna go up, and then you're gonna have to end up selling them. Maybe you sell them for a loss, or you sell them for a gain, but it doesn't matter. You're forced to sell them because you need that cash. You don't have that other cash around to help you out, bridge the gap. So if you don't have the cash available, you might have to sell those investments while they're down or while they're up. But up, it's great, but you still have to sell them when you don't want to have to sell them. That's a completely different situation from having money set aside for emergencies. So, you can tackle those emergencies. So sometimes cash isn't doing nothing. Sometimes cash is buying you options. And think of that, worth remembering. You don't want to hit up your credit card when you don't have to, and they're paying you you're paying them per se. You're never really paying them. They give you those little, cash rewards and stuff like that. In the end, and finally, it gets you no matter what. So you got to remember that you got to have some cash sitting there, even if it's paying you like 3 or 4%. It doesn't really matter. You have that cash there for emergencies. So always got to think of debt in the equation. There's another one being it's debt. If you have higher interest rates debt out there, especially credit card debt, I think it's worth being serious with that question and worth seriously asking yourself, should I really be putting extra money into stocks right now? And then racking up those credit cards. Let's say your credit card is charging you 20%. You could invest that money instead and hope your investments outperform that, or you could pay down that debt and eliminate the interest expense. There's tricks and all that. You can move the balance and all that to zero, but eventually it catches up to you, and that's a very different proposition there. So now, I'm not saying every type of debt should be automatically paid off before you invest. Low interest debt is a different conversation. Mortgage is different, but I think the mortgage should get that cleared as fast as you can as well, because you're just paying that the life of the loan, 30 years, and you should do that. I think that's a wise choice. So student loans can be different. Every financial situation is different, but high interest consumer debt is something I would take very seriously, because you can't, your portfolio can be going up while your credit balance is working quietly against you, every single month. Your portfolio be going up and the debt could be going up. I've had that happen before myself. You don't tackle it soon enough, it's going to bite you. So that's not necessarily a great financial position to be in. So if something tells me, I have credit card debt, I don't have much savings, I'm thinking about putting $500 a month into individual stocks. My first question probably isn't, what stocks are you buying? It is, why aren't you dealing with the debt? Building some financial breathing room for you first. Don't get into debt. Don't get into margin if you can't have to. If you, like, house debt, mortgage, buying a house, that's one thing, but getting all this other debt, it's not a good thing. So cash isn't the enemy. Another thing I think investors sometimes forget to think about is that cash has a purpose. I like stocks. I like researching companies. I like finding businesses that could potentially grow for many years. But I also don't like cash, not having cash available. Even in my head, I said I don't like cash, but because I'm so investment heavy. But I like having that cash there. If I don't have it, it gives you some freedom, some breathing room. You can sleep at night. And because cash gives you that flexibility, to do other things, to enjoy your life more. And if something unexpectedly happens, you don't have to sell your investments. Most importantly, if the market drops, you can actually have money available to invest when it drops. I did that with COVID. When COVID was in, I had cash available and I bought at the lows. That was the best time. Instead of selling when everybody's panicking, you had that cash there to buy. So that's one of the biggest reasons I don't think having cash automatically means you're being a bad investor. I think there's also psychological benefits. You have money set aside. You can look at your investments account and say, no, I don't need this money right now. That changes the way you react when the market drops. Maybe the market falls 10%, then 20, maybe it falls even more. I had the same way with COVID. Some people were panicking because that's all the money they had. For me, I wasn't panicking, so I had the cash and I was buying at the lows, and so maybe it falls even more, and you're not going to catch the bottom, but you'd rather be in that position to buy, have the cash available instead of be panicking selling at the bottom when that's the only thing you have and you're worried about losing your life savings. So if your bills are covered and you have money set aside, you're much less likely to panic. That's important, because investing isn't just about picking good stocks, it's also about being able to hold those stocks for the long term. The emergency fund. Let's be honest. Emergency funds aren't exciting. Nobody gets excited about an emergency fund. You're not going to see a thumbnail that says "My amazing emergency fund!" exclamation mark. It's not nearly as exciting as this stock could 10x as a title, and I believe that's the truth too. But financially stable isn't always exciting. Sometimes it's boring, and boring can be good. Having money set aside for unexpected expenses isn't going to make for an exciting portfolio screenshot, but it can keep you from making really bad financial decisions later, bad life decisions that end up, it can wreck your life. I think that's the point. The goal isn't necessarily to maximize the risk and the return, more the return on every single dollar to and the risk per se. That's what cash kind of eliminates, that risk. So the goal is to build financial situations that allow you to keep making good decisions over a long period of time. And that's very difficult, financially. Sometimes it's easy to take that margin money to check it off the box and when everything's, maybe it's down and you are getting into that margin, but then you're getting that margin debt and they could still sell you. So debt and margin they're all bad altogether. So you got to be worrying about those things. So emergency fund, we got that check. And so the next thing, there's other reasons I think waiting can be difficult. It's the fear of missing out. You're seeing a stock go up. Maybe it's Nvidia, maybe it's Palantir, maybe it's some other company that suddenly becomes the stock everyone's talking about. And you start thinking to yourself, I should have bought this 6 months ago. And then you start looking for the next big opportunity, and eventually you can end up putting money into something simply because you don't want to feel like you're missing out. But here's the thing, there's always a better stock down the road. There always will be another opportunity. There always will be another company that's looking exciting. So you don't have to participate in every one of them. You're not financially ready to invest. If that's one of your issues here, you're not ready to invest financially, that's okay. You don't need a rush. It's better just to take things, chill out, and ask yourself, I'd much rather see myself build a solid financial foundation, start investing consistently when you're ready, than to throw money away chasing these stocks that everybody thinks they're going to go up forever. You're just you're just getting the FOMO, having that FOMO, buying the highs, and then you're not saving any money, not paying down your debts. It's a bad thing to do. It's a double-edged sword, triple-edged sword, whatever they call it. So what does this mean? I'm not investing my money actually mean? What does it mean to, I'm not investing my money? It doesn't mean I'm permanently sitting on the sidelines. It means I'm thinking about where the next dollar has the most value. Maybe it means paying down expensive debt. Maybe it means building up cash. Maybe it means taking care of an expense, you know, I'm putting off, and just paying down the debts. You got to just get rid of those loan sharks and build up the cash. Um, Maybe it simply is keeping some money aside instead of immediately putting every dollar into the market. And you got to have some breathing room. And eventually, once those things are taken care of, that money can come back to investing eventually. That's an important decision. I'm not saying don't invest. I'm not saying invest because those are make sense to do. You're like trying to avoid those mistakes, trying to better your financial situation. Invest when it makes sense to you financially, because your investment portfolio is just one part of your financial life. You know, you can still watch the market as it goes every day if you want to. If you want to have fun there, if you want to research, if you want to drive yourself crazy sometime, you can watch it every day. Just put on CNBC or Bloomberg every day. I don't recommend it, but here's something I think is important. Not investing means you have to stop paying attention to the market. It doesn't mean that. It doesn't mean you. It doesn't mean you have to stop paying attention. You can still research companies. You can still follow earnings. You can still build a watch list. You can still learn from evaluation. You can still figure out what companies you'd like to own someday. You don't have to buy them today. You can actually be the one that looks at these things like, actually, one of my favorite thing to do, think about, is investing. You know, Researching, watching, investing. I like all that stuff, but sometimes you gotta put that stuff aside for what happens in life. You can watch, you can wait, you can do your homework, and when your financial situation is ready, when your financial situation improves, you can act. So there's no rule here saying you have to buy something every Monday morning, every Tuesday, every Wednesday, every Thursday, every Friday. Crypto you can buy 24/7. I'm not saying you got to do that, and there's no rule that you can't do that, but the market will still be here the next week, the next month, the next year. It's not going away. So don't confuse activity with progress. I think it's important that you think that mindset. You know, this is the biggest takeaway. Sometimes we confuse activity with progress. Buying a stock feels like you're doing something. You're moving money into a brokerage account, feeling productive. Woohoo! Trading feels productive. Watching the market all day feels productive. But none of these things automatically means you're improving your financial situation. Not really. Sometimes progress is much less exciting. Paying off a credit card, checking that off the box, paying another credit card, checking that off, this saving another 1,000, building an emergency, getting your expenses under control, increasing your income, maybe take a second job, do gig work to help out with that, learning a new skill, going back to school, and getting some degrees here and there. And then there's other things you can do with your money instead of just throwing it at the market. So, or simply not making an impulsive investment because everyone online is talking about them. Kind of avoid those chat rooms. They're not the greatest things in the world. No, those things might not feel exciting, but they can make a huge difference over time for your life, for your finances, for your family, everything. So, my final thoughts for today are: I like investing, I like stocks, I like owning great businesses for the long term, they can be incredibly great ways to build wealth, but I also think there's a time and place for investing. You can have expensive debt, you don't have much emergency savings, if you simply don't have enough financial breathing room, there's nothing wrong with putting investing on the back burner for a while. You may want to save money instead of throwing at the markets, save that money in cash, CDs, whatever, to build up your down payment on a house. I've done that. And sometimes the market isn't going to give you those opportunities. And so, you don't have to feel guilty about not having cash. You don't have to chase the market. You definitely don't have to find the next 100kx stock. Sometimes the best financial decisions are the ones that makes your financial situation stronger. Once you're in that position, it becomes more and more interesting having that cash, and you can breathe more, you can sleep at night, and makes investing become a lot more enjoyable to you. You can see the fruits of your labor. I've made mistakes like that before, stocks that I had and I didn't have the cash and I ended up having to sell them. I had the time, and I don't want that to do that again, and I don't want you to have to do that again, or even do that now if you haven't done it again. Don't ever let that happen to you. You always have the cash. Don't be in margin to call you out, and it could be the next great stock that you're looking at that's gonna give you life-changing money. And once you're in that position, you're set. Because you're investing money, you can afford to leave alone, not the other way around. Investing is like you have the money you can afford to lose, but you got to have that cash as a buffer. And that's completely different feeling from investing money that you might need next month to pay your rent, per se, for fix your car, for any other emergency, just to buy groceries. So that's it for today. Hope you enjoyed this talk, and I'm curious what you think. Do you have debt? Are you paying down debt? Are you building up cash, for tomorrow? Should those things like paying off debt, building up cash, come before investing, or do you think you should start investing as early as possible, even if you have cash? That too is great. Even if you have debt and all those burdens, should you still be investing no matter what? So leave a comment down below. Let me know your comments on that, and thanks for watching. And on that note, I'll see you on the next one. And as always, I'm not a financial advisor. This is just my opinion. If you need financial advice, talk to your financial advisor. I'm not that guy. I'm just a guy on YouTube, just sharing some entertainment and some my thoughts, my 2 cents, my opinion. And these are things that I'm practicing in my life, and I hope you guys are too. And I'll see you guys on the next one.